Let me ask you a question that should terrify every single person with a 401k, a mortgage, or a savings account. What happens when the man who controls the value of the global reserve currency is treated like a common criminal? We aren't talking about a hypothetical scenario anymore. We aren't talking about a conspiracy theory on a dark web forum. It is January 14, 2026. And the United States is officially in uncharted waters. Jerome Powell, the chairman of the Federal Reserve, the man who decides the price of money for the entire planet, is currently the subject of an active criminal investigation. We are talking about grand jury subpoenas. We are talking about the Department of Justice looking to indict the head of the central bank. On paper, the charge is perjury. They say he lied to Congress about marble floors, VIP elevators, and luxury renovations at the Fed's headquarters. They say he burned through $2.5 billion of taxpayer money to build a palace while telling the Senate he was just fixing the plumbing. But if you believe this is actually about beehives and roof gardens, I have a bridge in Brooklyn to sell you. This isn't about renovations. This is a hit job. This is the executive branch of the United States government declaring war on the independence of the Federal Reserve. President Trump has made it clear he wants lower rates, and he wants them yesterday. Powell hasn't delivered. And suddenly, coincidentally, the FBI is knocking on the Fed's granite doors. If Powell falls, the firewall between politics and the money printer vanishes. And if that wall comes down, the US dollar, your stock portfolio, and the stability of the global economy are going to be collateral damage. Buckle up. We need to talk about why Wall Street is bleeding out, and why this might be the beginning of the end for the dollar as we know it. Let's peel back the first layer of this onion. What exactly is the government accusing Powell of doing? To understand this, we have to go back to last June. Powell was sitting before Congress, likely expecting the usual grilling about inflation, the CPI print, or the unemployment rate. Instead, he walked into an ambush. Two Republican heavyweights, Senators Tim Scott and Mike Rounds, didn't ask about the yield curve. They asked about the drywall. The Fed is currently renovating the Mariner S. Eccles building, that famous fortress of pink granite on Constitution Avenue. It's an 88-year-old building. It's old. It's tired. Nobody denies that. But the price tag for this facelift has exploded. We're talking about a jump from $1.9 billion to a staggering $2.5 billion. To put that in perspective, $2.5 billion is roughly the GDP of the entire country of Bhutan. For a renovation. Senator Scott came out swinging. He claimed the Fed was building a luxury resort, not an office. He listed the amenities. Rooftop terraces with gardens. Custom elevators leading to private VIP dining rooms. White marble finishes imported for pure aesthetics. Beehives. Yes, literal beehives. Powell, under oath, denied it. He looked the senators in the eye and said, "There are no beehives. There is no VIP dining room. The elevators are the same ones from the 1930s. He claimed the cost overruns were because the building was physically rotting, asbestos, lead pipes, and the fact that the basement isn't waterproof. He essentially said, "We're not building a palace, we're trying to keep the water out." But here is where the trap snapped shut. Senator Scott pulled out the final plans from the National Capital Planning Commission's website. He claimed the luxury items were in the blueprints. Fast forward to today, January 2026. Republican Representative Anna Paulina Luna sent a letter to Attorney General Pam Bondi, yes, Trump's Attorney General, claiming Powell committed perjury. She argues that even if the plans changed later, Powell knowingly misrepresented the facts during that testimony. Now, the DOJ has issued subpoenas. They are digging. But here is the catch. I spoke with legal experts who handle white-collar crime. Mike Romano, a former federal prosecutor, called this investigation highly unusual. Why? Because usually, you get indicted for lying to Congress to cover up a crime that makes you rich, like insider trading or embezzlement. There is no evidence Powell is stuffing granite into his pockets. There is no evidence he is personally profiting from the elevator contract. So why go after him with the full force of the Department of Justice over a construction budget? Because, ladies and gentlemen, in the Game of Thrones that is Washington, D.C., you don't indict someone because they're a criminal. You indict them because they're in your way. Let's stop pretending this is about architecture. This is about interest rates. President Trump has been attacking Powell for months. Just this Tuesday, as he was leaving the White House for Detroit, Trump didn't mince words. He said, and I quote, "He's billions of dollars over budget, so either he's incompetent or he's crooked. I don't know what he is, but he certainly doesn't do a very good job." Doesn't do a very good job. In Trump speak, that doesn't mean Powell is bad at renovating buildings. It means Powell hasn't cut interest rates fast enough to juice the stock market before the midterms. Here is the economic mechanism you need to understand. The President of the United States always wants low interest rates. Low rates mean cheap mortgages, cheap car loans, and companies borrowing money to buy back their own stock. It makes the economy feel like a party. It makes the voters happy. The Federal Reserve Chairman, however, has a different job. Their job is to be the designated driver. When the party gets too wild, when inflation starts heating up, their job is to take away the punch bowl. They raise rates to cool things down. Right now, in 2026, we are in a stalemate. Inflation has been sticky. Powell has kept rates higher for longer to ensure we don't end up like the 1970s. But high rates hurt the real estate market. They make the national debt more expensive to service. And they annoy the president. Powell claims this investigation is a pretext. He believes the administration is weaponizing the Justice Department to force him to resign so they can install a loyalist, someone who will print money whenever the White House asks. And this is where the wallet connection hits you right in the face. If the market believes that the Fed chair can be fired or arrested just for disagreeing with the president, the Fed put is dead. The independence of the central bank is the only thing that gives the US dollar its credibility. If investors in Tokyo, London, and Beijing think that US monetary policy is now being run from the Oval Office, they will dump US treasuries. Why? Because politicians always choose inflation over recession. If the president controls the printer, he will print money to win votes. That devalues the currency. If you are holding US dollars or US bonds, you are holding a melting ice cube. This investigation is a signal to the market, the era of independent money is over. To understand how dangerous this is, we have to look at history. We have seen this movie before, and the ending is a horror show for your savings. Let's go back to 1972. President Richard Nixon was up for re-election. The Fed chair was a man named Arthur Burns. Nixon was ruthless. He was caught on tape bullying Burns to lower interest rates to boost the economy before the vote. He literally yelled at the Fed chair. Arthur Burns caved. He lowered rates when he should have raised them. The result? Nixon won the election in a landslide. But the US economy paid the price for a decade. Inflation ripped through the country, hitting double digits. The cost of living exploded. The stock market, adjusted for inflation, lost 60% of its value over that period. That is the Nixon scenario. And right now, Wall Street is terrified we are watching a reboot. But there is a worse scenario. The Turkish scenario. Over the last decade, President Erdogan of Turkey decided that he knew better than the economists. Every time a central banker tried to raise rates to stop inflation, Erdogan fired him. He cycled through central bankers like they were disposable tissues. The result? The Turkish lira collapsed. Inflation hit 80%. The middle class in Turkey was wiped out. Their savings became worthless overnight. People were rushing to buy gold, crypto, or US dollars just to survive. Now, look at the US in 2026. We have a president calling the Fed chair crooked and incompetent. We have the Justice Department issuing subpoenas. We have a threat to remove the Fed chair not through firing, which is legally difficult, but through criminal indictment. If Powell is handcuffed, who replaces him? A loyalist? Someone who believes modern monetary theory allows us to print infinite cash? If that happens, the US dollar loses its status as the bedrock of the global financial system. And if the dollar cracks, everything priced in dollars, your stocks, your house, your salary, becomes incredibly volatile. Before we look at the market crash scenarios, let's play devil's advocate for a second. Is it possible Powell did mess up the renovation? I want to be fair here. $2.5 billion is an obscene amount of money. The Fed's defense is technical. They claim the Eccles building sits on what used to be a swamp near the Potomac River. If you know anything about DC geography, this is true. The water table is high. Building underground in a swamp is an engineering nightmare. They also cited antiquated mechanical systems. The building is filled with asbestos and lead. You can't just knock down a wall in a building from 1937, you need hazmat suits. Powell stated in a letter to OMB Director Russell Vought that the water features and fountains were scrapped. He says the VIP dining rooms were never in the final build, that the rooms in question are just historic multi-use conference rooms on the 4th floor that are being preserved. So, we have it, he said, she said. Powell says, it's asbestos and swamp water. Tim Scott says, it's marble and beehives. But here is the smoking gun that suggests this is political. The timeline. The renovation costs were known for years. The plans were on the website. Why is this a criminal emergency now? Why is the urgency peaking exactly when the White House is frustrated with the interest rate policy? If Powell had cut rates to 2% last year, do you think Representative Luna would be writing letters to the Attorney General about elevators? I'll let you answer that in the comments. But from where I'm sitting, the timing is suspicious. It looks like leverage. It looks like a way to say, cut rates, or we put you in front of a jury. Okay, enough about politics. Let's talk about your money. Why should a guy in Ohio or a family in London care if Jerome Powell goes to jail? Here are the 3 dominoes that will fall if this investigation escalates. Domino number 1, the bond market revolt. The US Treasury market is the biggest, most liquid market in the world. Investors buy US debt because they trust the US government will pay them back with dollars that are worth something. If the Fed loses its independence, investors will demand a higher risk premium. They will say, if you're going to print money to fund luxury projects or buy votes, I want a higher interest rate to lend you money. This causes yields to spike. And since mortgage rates are tied to the 10-year Treasury, your mortgage rate goes up. Even if the Fed cuts official rates, the market rates could skyrocket because of the risk. We saw this in the UK with the Liz Truss budget catastrophe. The government tried to play games with money, and the bond market nearly destroyed the pension funds. Domino number 2, the inflation resurgence. If Powell is forced out and a dove is installed, the stock market might rally for a week. It's a sugar high. But then, the reality sets in. Without a strict Fed, companies will expect higher inflation. They will raise prices. Unions will demand higher wages. We enter a wage price spiral. For you, this means the cost of groceries, gas, and insurance keeps climbing, eating away at any gains you make in the stock market. You might see your portfolio go up 10%, but if inflation is 12%, you are losing money. Domino number 3, the stock market volatility. The stock market hates uncertainty. It hates unknown unknowns. A criminal trial of a sitting Fed chair is the ultimate uncertainty. Algorithms trade on headlines. If a headline breaks saying Powell indicted, the S&P 500 could flash crash. Institutional investors, the big pension funds and sovereign wealth funds, will move to safe havens. Usually, that's the US dollar. But if the dollar is the problem, they might flee to gold, Bitcoin, or Swiss francs. This capital flight sucks liquidity out of the US market, causing stocks to tank. So, how does this end? I see 2 main scenarios playing out over the next 6 months. Scenario A, the soft coup. The investigation drags on. No charges are actually filed, or if they are, they get bogged down in procedural delays. But the damage is done. Powell is politically castrated. His credibility is shot. To save face and avoid prison, he agrees to compromise. He cuts rates earlier than the data supports. The White House claims victory. The stock market rallies into the midterms. But underneath, inflation starts to bubble up again. We get a stagflation environment, slow growth, high prices. This is the slow death of your purchasing power. Your move, in this scenario, you want to own hard assets. Real estate, commodities, gold. Things that go up when the dollar goes down. Scenario B, the Saturday Night Massacre. The DOJ actually indicts Powell. He refuses to resign. The president attempts to fire him for cause. The legal battle goes to the Supreme Court. During this time, the Fed is paralyzed. The markets panic. The US credit rating gets downgraded again. Foreign nations stop buying US debt. The dollar crashes hard. Your move, this is the sell everything scenario. Cash is trash, but stocks are risky. This is where hedge funds buy volatility insurance. If you see this happening, if you see Powell in handcuffs, liquidity is going to dry up instantly. The investigation into Jerome Powell is not a story about renovation costs. It is not a story about whether a government building has a beehive on the roof. It is a story about the erosion of institutions. For decades, the deal was simple: the politicians run the country, and the technocrats run the money. The politicians spend, and the bankers make sure the check doesn't bounce. That deal is broken. We are witnessing the politicization of the absolute foundation of capitalism. When the President of the United States says the Fed chair is crooked because interest rates are too high, and then the Justice Department launches a probe, the signal is clear. Conform or face the consequences. Whether you love Powell or hate him, whether you think he printed too much money in 2020 or tightened too much in 2024, you should be deeply worried about what happens when he is gone. Because the only thing worse than a central banker who makes mistakes is a central banker who takes orders. Call to action. I want to know what you think. Is Powell actually corrupt, or is this a political hit job to lower interest rates? And more importantly, are you moving your money into gold or Bitcoin to hedge against this chaos? Let me know in the comments below. If you want to stay ahead of this crisis, make sure you subscribe and hit the bell. The mainstream media is talking about marble floors, we are talking about your financial survival. I'll see you in the next one.